What is up, guys? This is KOJOFOREX, aka GBP Legend, aka Sniper Trader, aka King of Blues. I'm back again on your screens with another relevant YouTube video. Like I told you, and I'll keep reminding you, anytime I shoot a YouTube video, it means that I have something very valuable or very smart to show you guys, right? Today, I just thought about the fact that it's been quite a while I shot a strategy video, so I decided to teach you guys something very interesting that's going to occupy your next 8 minutes, right? Or probably even more than that, perhaps even less. Let's see how it goes. But basically it has everything to do with my XAUUSD scalping strategy, right? So now you guys may understand that gold is very different, right? If you find a gold strategy that works for you, indeed you've actually found gold. If that made sense to you, then you got to smash the like button and then subscribe to this channel, because you guys will really agree with me that gold does actually pay, whether you're using a small account or a big account. So in this strategy that I'm going to be teaching you, which is more like a day trading strategy, but I like to call it a scalping strategy based on the fact that I am so used to like swing trading a higher time frame. But this strategy can actually give you like a relevant pip value that can make you a lot of money when you're trading gold. It's not something that is so obscure, something that is so new, something that you've not seen before, but the way I'm going to interpret it is going to make it much of a difference for you to really make a lot of money using this analysis on the market, right? So without wasting much time, let's go straight into gold chart, and then I'll show you guys what I have for you, right? So today my chart is looking a little bit different, right? I'm using my black template. I like to use a black template, especially when I'm trading gold, because it has some little bit of vibe and, you know, that spiritual thing to it, you know, that can allow you to really see the market clearly as you want to. So yeah, guys, let's start with the 3 principles that I want to show you, right? So you guys must understand that when it comes to trading, you got to follow principles. If you really want to succeed on the market, you got to have a set of principles that you want to follow. What do I mean by a set of principles? A set of principles can be your trading time, right? What do I mean by trading time? Somebody may say, oh, for me, I only trade on the Asian session. So you only see them trading around Asian. Somebody will say, oh, for me, I only trade in the London session, right? And then a set of principles can be a time frame. Somebody may say, okay, for me, I only stick to 30-minute time. I only stick to 4-hour time frame, right? Now, somebody's also set of principles can be their rules for entry. Somebody will say, I only trade supply and demand. I only trade support and resistance. I only trade trend line. I only trade using moving averages. It's all part of your set of principles, right? So here we're going to disclose 4 main set of principles, right? Now, the 4, only 3 has to do with our entry criteria, but the only one has to do with our entry time frame, right? Or our trading time frame. Now we're going to maintain the 15-minute time frame for what I'm going to show you, right? So with what I'm going to show you with gold, we understand clearly that it's a lower time frame strategy or lower time frame setup, which is the 15 minutes. Now the second set of rule is that we're going to be using supply, right, which is like a resistance trade setups. And then number 3, we're going to be using demand, which is like a support trade setup. And then number 4, which is the last one, we're going to also be trading trend line breakout, not necessarily trend line bounce off, but actually the breakout. And I'll show you the noops and crannies into how to identify proper breakout setup and then how to trade it profitably as well. So yeah, now we understand number 1 rule, which is like we maintaining that 15-minute trading time frame for this setup. Number 2, we're saying what we're only going to be usually interested in that demand zones. Without wasting my time, let me help you identify some demand zones in the market using the 15-minute, right? So like, yeah, we can watch gold here, right? Now I've done a strategy video in how to identify clear demand zone with no traffic, right? I'll explain what I mean by no traffic in subsequent videos. But now you can watch here, right, that if you watch here in gold, we can see what this region right here created that demand zone for us, which can be also called a support level, right? So with this level, what do you want to do? Now this market has already been traded, right, in the sense that the market moved from this area right here and then pushed all the way here. Now on the level of probability for this to be a next best setup for you, unless the market comes back into this area and then expected to repeat the same process, then you as a trader can take advantage of that, right? Now I've told you guys in my subsequent video that for me, how I identify my support region or my demand zone is that I pick this horizontal ray here and I put it on the very last wick, right? And then between the wick and then the body of that particular candle becomes my demand zone, right? If you remember from that very video where I said how to enter a trade or the very moment to jump in a trade, right? You should go look for that video if you haven't done that already, and then watch you. It's going to teach you some more tips and tricks into this strategy. Now, once we have created this demand area right here, right, and then we have this market literally crawling back into the range, right, after all it was doing here, right? Remember that this is exactly how we're going to be looking at the market, right? So here you just want to identify that demand zone, because it's now forming part of your setup. So you're only waiting for the market to come into that demand zone before you make any sort of trade setup, right? So now let's say we're waiting, the market is doing its own bits, running up and down, and then coming closely into that zone. The moment it taps into it, then as traders we got to be very cautious and then alert into knowing when to jump into it. Now remember that if you clearly can see what is happening in this zone, right, the market was just trading with what? Bearish candle, bearish candle, bearish candle, bearish candle, taps into the range, closes with what? A bearish candle. Subsequent candle, then it closes with a bullish candle, right? Now that bullish candle is a signal for you to want to jump in on this trade. Put your stop loss right beneath this low here, which is you risking about 30 pips of gold. And trust me, if you have a trade setup that allows you to risk 30 pips of gold, it is actually golden. You'd understand it with time, right? If you take this kind of setup, you want your take profit area to be finally this last highs here. You understand what I mean, right? So your first take profit, usually I like to set two take profit levels, could be like the mid range, right? And then your final take profit could be like these highs here, right? If you're using this demand strategy that I'm showing you, which is like, remember, a scalping strategy or a day trading strategy, right? Now let's see how this one totally plays out, right? Our TP gets smashed and way over, right? Now this is also one of the reasons why I usually wouldn't even set take profit, because you cannot place a limitation on how far the market can go. You understand me? I would rather put my stop loss and then my entry, and then when the trade gets into my profit, then I trail my stop loss in terms of adjusting the stop loss level now a little bit in front of my entry, and then letting the trade literally play out. And because I'm a full-time trader and I have all the time to monitor what is going on in the trade, I know how to subsequently manage those trades. Now imagine that you set a take profit here or you set a take profit here, and this market had to blow out like this, right, which literally went all the way up, right? This trade literally was a 1:10 trade. Imagine risking 2%, then that's 20% made off on one move, right? Let's see how far it even went if I keep playing this. So yeah, it went a little bit further. I think 12, right? 1:12, which is like 2:24. If you raise 2%, you're actually making 24% in one. And then remember that this is a day trading and this is 15 minutes, so it literally will take you less than, let's say, about 2 hours to make all this profit here on gold, which is very, very, very rare, right? Now let's go on to the second one, right? So with the second one, now remember this setup, this is a demand zone. We're going to look at the supply zone setup as well, right? With the second one, let's look at what unfolded with this, right? Now this market is gradually coming down, so already this wick here has established itself as a supply zone. Remember what I told you, that anytime the market reverses from any key point into the opposite direction, automatically it becomes a demand zone or a supply zone, or perhaps you can call it support or resistance, right? Which is part of like my new school of thought, because most people are taught on YouTube that you got to have a consistent or continuous bounce off on a particular level before it can be regarded as a support or resistance. Where the market is bouncing on the downside 3, 4, 5 times, you call it support, or bouncing on the top side 3, 4, 5 times, you call it resistance. But I told you that anytime you have any reversal, right, based on my economic principle, then we call it what? A support or a resistance. So we are applying the same thing here. Now this area becomes our supply zone, right, in the sense that we're expecting the market to come and tap into this range somewhat and then reverse. But let's see how this one also eventually unfolds. So yeah, we have the market coming down, right? Let's see the first instance where it has some interaction with the market. So here eventually it taps into this range. So here you want to really watch your price action and then see if you have any form of confirmation before you want to jump in on this trade, right? So we have a little confirmation here, right, which I should have marked out. So here you want to take your trade here. Again, remember your stop loss got to be above the range. So in this kind of setup, you're exposing yourself to about 40 pips, 36 pips in profit. And I said, if you have any strategy that allows you to risk between 30-40 pips, it is actually golden, especially when you're trading gold, right? Let's see how this one plays out. So comes down, still lingers around there, right? Obviously, if we're taking this trade, our take profit would be beneath these lows here, right? So gold is just playing around this area, puts us into about 30 pips in profit, right? And then let's see what happens. So remember that this one, with what is happening here, right, with this vertical line you can see here, the market closed on Friday. So it means that all things being equal, this would have been a break-even trade for us until the market opens in the next week, right? If you follow exactly what I mean, this vertical line here basically tells me that the market closed at this very point. So basically, from clearly what we are seeing, we would have had a break-even trade until the next Monday or Sunday morning, right? Now let's see what happened with this Sunday morning. Now the market had already given us the signal that is about to drop. So Sunday or Monday morning, I expect you as a very diligent trader to keep monitoring this setup, following the same principle. Right now, let's see what happened. Yeah, we have continuous signals, and then we've had like this, rejections going on there. You really want to monitor until you have like that very strong bearish confirmation, just like this candle right here. And then you want to jump in on this candle, put your stop loss just right above the range like that, and then you're targeting these lows here as your final take profit, right? Now, if you want to be, very adventurous, then you could target the market even coming extra lower to this point. But be cautious of where you put your take profit. I would genuinely put my first take profit anywhere within the range and then be very conservative and then put my extra take profit around this area. But let's see how this trade eventually also plays out. So what an incredible way to smash our take profit on a daily basis just using our supply and demand principle, right? Now I think you guys have seen how very accurate and then very sumptuous this setup is. Let's just end this setup with the trend line breakout setup, right? So I have the same thing here. So with this trend line breakout setup, what we can clearly see is that if we're even analyzing the way this market is just bouncing off on this one, right? And then we have this line here, we can clearly see that the market is making higher lows here. It goes up, it comes back to tap on the trend line, it goes up, comes back to tap on the trend line, it goes up, comes back to tap on the trend line, and this time breaks out of the trend line. So the moment we have that candle, that just closes beneath this range, then we can solidly say that this trend line has been broken. Now this is exactly where you want to find your intraday trade, right? And then if you're finding intraday within this range, you want your take profit to be anywhere here, right? And then if you also want your take profit to be anywhere here, then you want to set your stop loss just above the last high of the candle. So typically this is how your setup will look like. Let me illustrate that to you guys briefly, right? Typically this is how your setup would look like. So yes, I want you to find your entry around this range when we've had that breakdown. Entry here, stop loss just above this high of the candle, which is about 28 to 30 pips again, and then your take profit just, back to these lows here. And then this makes up a risk to reward of 1:4. Let's see exactly what happens with this trade. Easily smashed, right? So if you just follow this principle that I've taught you guys, that 3-rule principle, in fact 4, the number 1 being your time frame, right, which is sticking to that 15-minute time frame, and number 2 being you finding that supply setup, and then number 3 being finding that demand setup, and then number 4 being that finding that trend line breakout setup, right? You have a whole thing going on, and you can make money consistently trading gold, right? There are more things that I'm going to be sharing with you guys along the line just with this, intraday scalping 15-minute time frame on gold, right? This is just part 1 that is going to open your eye to a new dimension of how you can make money every day just following gold analysis alone, right? Yeah, so without wasting my time, I hope you guys love this video. Make sure to smash the like button and subscribe to this channel if you're a new viewer. Also make sure to follow me on all social media at KOJOFOREX, Instagram, Facebook, Twitter, wherever, right? these days you cannot trust any of the social media, so you want to follow me on Instagram and then Twitter especially, so that you can keep up to every update that I have for you guys, even if Instagram is not working or Facebook or whatever, right? And then finally, click on the link in the description to join the Telegram community, the KOJOFOREX Telegram community, which has close to about 24,000 community members. I drop free signals in the community every day for people to make money for free, and then I share these YouTube videos there for people to learn as well, including other educational materials. Yeah, so I hope you guys love this video. Without wasting much time, I'll see you guys in the next YouTube episode. Peace out.